Hey everyone, welcome back to the channel. My name is Richard Moglen, and welcome back to the Winning Characteristics series with Ray from TraderLion. Ray, thanks again. And today we're going to be talking about NIO and explaining how it showed up on our screens and all the winning characteristics that it exhibited. We kind of got ahead of ourselves last week, and we didn't kind of explain what the series is all about. So could you kind of give a brief summary of why we're doing the series and what people should try to get out of it?
Right. So I think the key takeaway from all this should be, you're trying to analyze winners, and the purpose of analyzing a stock that may have moved from $15 to $50 is to sort of ask yourself that question of, do the processes that I have in place allow me to potentially catch the next stock that might exhibit these characteristics? Now, that might be a NIO, that might be a Tesla, that might be, Celsius. But once you ask when you're doing these studies, you want to ask yourself that question: that do the processes I have in place allow me to even do they even give me a slight chance to have this on my watch list so I can potentially end up buying it? So it's to train your eyes, see the price and volume characteristics. Though this might look messy, it's just all price and volume, notes. And does the process you have in place allow you to sort of have these on your watch list so you have a chance to potentially buy them and be in a winning stock? So that's sort of the whole point of this series.
Absolutely. And throughout the series, we're going to be going through the best stocks of 2020. So if Ray, you could pull up that that list from IBD. The best way to find the next potential big winner is to study the ones from the past. And 2020 had so many excellent examples. So this is kind of the main pool of stocks that we'll be analyzing in this series.
Right. So what I think you guys should be doing, I mean, so Richard can probably put the link in the description, is to either print this out, have it bookmarked, pick a chart. Maybe if you're working full time, pick a weekend, Saturday morning, whatever the case might be, and just pull up one of these charts and do a price and volume analysis of it. There's about 100 of them. You might get through it, if you do one a week, two a week, whatever it is. The whole purpose of this is to train your eyes so that you give yourself a slight chance in the markets for the 2021 best companies. Maybe you buy a few of them, right? So when you're watching this video, the best thing you could do is make notes, have key takeaways, but then also go back and sort of do that yourself, because the application of something is how you're going to learn that thing. You can watch me and Richard go through it, but if you actually make notes, apply it, do it yourself, and sort of take that next step to, make that commitment, that's sort of going to improve your trading rather than just watching people.
Absolutely. All right, let's dive into today's video analyzing NIO. And Ray, you kind of wanted to focus on the process of finding a potential stock like this. So why don't you start with how you might pick up this name in your screens or in your weekend routine, and start with that.
Right. So one of the first things is within my process currently, what I do is I run a weekly high tight flag screen. These are not high tight. The screen that I run won't spit out companies that, or charts that look like a high tight flag, but it's just the simple criteria of, if a stock has moved 100% in 8 weeks, I just want to know about it, or run a scan that will give me a list of companies that meet that particular criteria. And then from that point on, I will analyze each of the charts that show up on the high tight flag scan, and sort of look at, the volume to see, what exactly is going on the charts. And then it will make my HTF, what I call the high tight flag watch list. So that is the first step within this particular chart, or that would tell me, I need to start watching NIO, for example. So NIO was a 257 percent move from the $3 range to about the $10 range. And then now at this point or this area, I just have it on my watch list. I'm not buying it. I'm not doing anything with it. I just have it on my watch list, and I want to keep track of a stock that might continue and do this down the road. So that, like, how do I come up with that? Like, why do I do this or this particular scan? This goes back to, studying market winners. What do market winners do each year? And what characteristics do they exhibit that will allow me to have a process in place that allows me to sort of have a NIO on my watch list?
Mm-hmm.
So I think that part's really important. NIOs just won't show up and say, buy me. You need to have a consistent process some people do it daily, some people do it on a weekly basis, and maintain that watch list for you to have a chance to sort of have this in your ball. You want this to have it. You want to have this in your crosshairs so that you have a chance to possibly position in it. So that's the first step from a process point of view.
Absolutely. And one more way that I actually found this stock is I was looking at stocks hitting new all-time highs, and way back during its IPO days, NIO made an all-time high of 13.8. And after this big run-up of 257%, it hit my new all-time high list. So that's kind of how it popped up on my radar. And then I was watching it consolidate above that level and tighten up on the right-hand side.
Right. So I guess like the takeaway here is you just want to have some sort of process. So Richard does it a different way. I may do it a different way. You may want to do it a different way. It's just important to have the process in place that allows you to do it.
Absolutely. All right. So Ray, now that you've got it on your focus, on your list that you're watching, how does it make its way onto your focus list, and then eventually it's a buyable position for you?
Right. So after for me, when it made my high tide flag watch list, and I would have updated it on a weekend. At that point on, what I'm doing is basically analyzing the prior action first and then the current action. So if we're about this point in the chart where it shows up on the HTF watch list, I'm looking at the prior action. So some of the things that we covered in the last video would be a step up in daily average volume that shows, there's some sort of institutional interest in this name. One of the things that I did notice is during the corrective price action on NIO, the volume was below average. That's just something that tells me that there's not a strong willingness to sell stock when price is moving down. So that doesn't mean that it has to bounce. It's just something to keep an eye on from just a supply demand point of view, right?
Mm-hmm.
And this is something that we've been seeing recently, where a lot of the software stocks are sort of retracing on below average volume. That includes the stock that we covered in the last video, PLTR. Much of the retracement from that 27 mark to the 24 mark the past week has been on below average volume. So you still want to give it that chance, and maybe we could just pull PLTR.
Yeah, go ahead.
So you see that this retracement from that $1.29 mark to basically 22.5. There's no volume on there. So though, if you were positioned at say 25 and you took a third or whatever the case might be, you still want to have this on your watch list until you see that firm breakdown. So what PLTR is doing now is attempting a reversal, and it might, just repair itself, right? A lot of this action like when I started out trading, I would be pretty, I would sort of take this off my watch list, and PLTR would be gone, and I would not know about it until maybe it was back at 30. But I've sort of built that into my process, where if price is retracing and the volume is still, it still looks constructive from a price volume, even the price is dragged down on lower volume, that's constructive action. So you still want to keep it. on your watch list. So going back to NIO, that's sort of the idea, even though it won't be on my watch list here, but that's sort of the concept here. When prices drag down on below average volume, you still want to keep the stock on your watch list and sort of still keep it in your ecosystem and not get rid of it completely, because it might reverse and you might be interested when it is reversing.
Yeah, well, one more point that I want to make is on the right side of that IPO primary base. I'm seeing a lot of gap ups on large volume, big blue bars, and to me that shows there's a lot of power behind this move. And like Ray said, it was up 257.9% in just a matter of a few weeks. So there's some force in the market. We don't know what it is, but it's moving the stock higher, and then it's setting up constructively. And now we're looking for tightness, some more winning characteristics to kind of convince ourselves that this is worth putting on a position.
Yeah. So NIO, once you have it on your watch list and now you're basically stocking for an entry, right? At this point, what I'm watching for is basically, how is the stock acting within, price and volume character. So we had huge volume here, and then it sort of it's consolidating under that $15 range, if you will, right? There are a few large red bars. So at this point, I'm sort of just on my watch list. I don't see a big reason to be positioning into the stock, right? It's, for me, it really, when there was new volume that came in right here on these 2 days. So that would be August 25
Mm-hmm.
and August 26. That's sort of that action, above that 15 mark sort of catches my eye. And I was a buyer at this point because it's going through that prior high on huge volume.
Mm-hmm.
And then there was a follow through on that day, but then I sort of got stopped out on this.
Mm-hmm.
And I would take that position flat. That was around August 31. I had buys on August 31 at about 10:30, and then a few days later, I was just stopped out at this bar.
Mm-hmm.
So from that point on, I'm sort of, this is still on my watch list. I attempted to buy it, got stopped out. It will still remain on my watch list to see if it gets a little tighter, right? And the real obvious entry on this, and what you want to look for, is market was moving down again, right? And NIO is sort of going sideways.
Mm-hmm.
That's your relative strength phase, if you will. While the S&P is moving down, NIO is sort of flattening out or building that square formation. It's squaring up to shoot, right? If you want to use a basketball analogy, is price action is sort of building that box that you could sort of visually see. Market is moving down, but NIO's moving sideways. And that really catches my eye, because I'll be making relative strength lists at this point, right? And NIO will show up. It will show up again. It will show up repeatedly in this zone, which will keep me interested in the stock because it's on my HTF watch list still.
Mm-hmm. And Ray, I have a question.
From that point on, yeah, go ahead.
Yeah, I was just going to ask, so outside the price action, are you also looking at what group it's in, the sales earnings the past 3 quarters? Are you taking that into account at all? Or now that's on your high tide flag watch list, you're only focused on the price action?
Yeah, I mean, the only thing I'll look at is it's in the EV space, and Tesla is the other giant that's sort of moved up off the bottom.
Mm-hmm.
And this is the China Tesla, right? That's pretty much all that I'll look at. And then there's volume that's doing the talking for you. There's these 2 other pillars that come in that's doing the talking for you. These are institutions talking to you on the charts, saying, we want a position in this name. And that's really all I'm looking for. I'm not looking for a particular, what they're, who the CEO is, who the founder is, what they're doing, how many models do they have for the electrical vehicle, whatever the case might be. institutions are interested, I'm interested in the story. That's at least how I process it.
Gotcha. So after that point, what's the kind of next viable opportunity for NIO within this uptrend?
Yeah. So basically, if you look at it, most of September, right? So from the market is moving down from September 2 to this point, which is September 25. That's a full month almost of trading, where when I'm making my RS list, NIO is going to show up on multiple days. In this case, it would have been about, I could see 6 or 7 days or 8 days within this time frame where it will just show up on my RS list. At that point, what I'm doing is I'm looking for an entry because this stock for some reason is outperforming the markets when the market is sort of in a corrective manner, pulling back.
Mm-hmm.
So once it shows up on my RS list, at this point, the stock will go from my HTF scan. So at this point, I have enough reason to move it from my HTF watch list to my focus list. Now, at that point, I'm watching the stock every day, and I want to figure out an entry and a risk. I'm always thinking from a risk point of view. If I buy it, where would I place my risk, and then let it work itself out? So in the case of NIO, I was a buyer right on this day when it reclaimed, or sort of this action. If we could zoom in, but this is in the Wick action versus the prior day. So it does an undercut and rally of the 23 EMA, and then it does it in the Wick action. It trades in the prior day's Wick, which I think
it's the space between the high and the close, right?
Exactly.
That's what you mean.
So, right. So the concept of in the Wick here, what it means is that there was a sell-off or something that happened the prior day where the high to the close forms a Wick. And what you want to do on such day, that the next day, what you're watching for as a sign of resilience to prior day sell-off is the stock to trade in that particular Wick. So that's saying, it's trying to show that it's strong. It's trying to, that's sort of what it's trying to talk to you and say, I'm trying to be resilient to prior day's sell-off. And SEDG on this particular day, it's showing you that it's strong, and it was good volume as well. So that's sort of the characteristic I spotted after it's undercut of the 23 EMA, and then it trades in that Wick. Now it has relative strength days, and sometimes what people confuse is, Ray, the market moved up and NIO's not responding, right? That's sort of the follow-up question. Once you're tracking RS days, you know that there's some force in the market that's holding the price. Now the market starts moving up and your stock is not moving. Like what happened? What's causing that? Why is it not moving with the markets? So the way you want to process it is, that there's institutional activity on the charts, there's volume. So you have to you can't just say, that one day that it didn't outperform when the markets actually woke up, that's the end of the story and I can't trade this stock anymore, right? You can't have that, because for the better part of the month, there were many RS days where NIO was outperforming the markets. So you still want to, even if you don't position the way I did here in the Wick and then it sort of worked right away and it took off, you don't want to have that mindset where one day of underperformance on a name and you take it out and you say, whatever it did for the past month is out the door. So this goes again to, keeping the names on your watch list. This is very similar to that. You just learn this, that once you have RS days, you have a recipe going that will net you success if the market trends for multiple weeks or days. Then this sort of woke up and it showed us that. So at this point, that's the non-obvious entry area. the undercut 23 EMA in the wick, and then it sort of, wakes up again. You see large volume come in relative to the down days here. And then it really tightens up. This is sort of the most obvious tight area on this chart before it runs up to 50.
Mm-hmm. And Ray, maybe some people asking this might say it's already gone up 300%. Why are you still even looking at this stock? Obviously, it's way extended from where it should be. What do you kind of have to say in response to that?
Right. I think that's a valid question, and a good way to think about it. But the same thing can sort of be asked where who's creating this volume, right? This is when I'm buying in this area, this is sort of the insulation for me. These two particular days where they saw big volume, and this volume is big enough to say that this is new money coming into the name throughout the prior breakout point. It holds and it sort of trades above that area, builds some sort of respect for 15. So yeah, it's up like 500%. We don't know when it's going to end. The only thing that we know in the markets is what our risk is going to be. And based on the prior action of these 2 days having very large volume and potentially new interest has showed up in the name, that is all you could really bank on at this point. You can't just say, it's up 500%. I'm never going to trade it. I'm going to wait for it to go back down to earth like $2 and then I'll buy it at $2. That's just not, if you're, I guess, I don't like labeling my trading, but if you're a swing trader, you can't really think, or a price action volume trader is probably a better phrase. You can't think that it's up 400 or 500% and it can't do that and it can't keep going, especially when the market off the lows has been very cooperative and all that other stuff that goes with it.
Absolutely. And we see even more volume coming in after that really tight area, even larger than the previous kind of move up.
Right. So we're seeing new interest come up in the name. So this particular breakout through the prior high, I tried a position, got stopped out, and then now this particular area, there's a drop off in volume, RS days in the wick action you position in. Now it really gets obvious right over here. It's very obvious. It's tight action, holding the 10 DMA, right? A slight undercut of the 10 DMA. At this point, volume's completely dried up, and then we get some sort of catalyst that pushes price up again. So from a price volume perspective, what you want to see is during tight areas, constructive tight areas will have a dry up in volume relative to the prior volume, which is these two bars. Non-constructive tight areas in the market, when the price action gets tight and you see, if we saw equivalent red bars and price was tight, that's not really a constructive tight area. And that's just something I picked up with Ross, where he says when price action gets tight, and he talks from a weekly point of view, but you could sort of see this on the daily, is price volume dries up on a relative basis and this is what you could call a constructive tight area, basically.
Absolutely.
So at this point, the position in this, if you weren't this is a fairly, I would say, if you're fairly experienced, sitting at the screen, noting RS days like I am, even on an end of day basis, you could do RS lists, take a look at them, and sort of NIO would keep bugging you and say, position in me. You could still get into this name above that 20 mark, right? 2021 mark. And then it sort of bases above that 2021. Price volume show constructive action. And then this is a gift, right? Nobody knows this is going to happen. Nobody really, there's nothing that could tell you that this thing's going to gap up and then just keep going. But the only thing we do know is there's prior volume, there's constructive action, there's RS days, and it keeps bugging you. It gets on your focus list. You could buy it through 2021. You know your risk at that point, maybe the 21 day or the 23 EMA. and you sort of have to let it work. And it gives you that sort of that gift at that point, and it just moves up and up, out.
Mm-hmm. And how are you managing your position? Are you taking anything off at any of these during this uptrend at all? Or are you sitting through this entire new base that it's forming right now?
So the way I position, it's very different than, traders, how they position is personal to them, and what their risk appetite is and what their system and process is. So what I'm doing may not work for, even Richard or anybody else. So that's sort of the part of trading that you sort of have to figure out what works for you, and what works for you is what works for you, and what works for me might not work for you. So what I'm doing is I'm basically positioning at the 23 EMA, and like that in the Wick, and my average cost was, I think, 1823 on this particular name.
Mm-hmm.
Right. And I have that full position now. At this point, when it gaps up here, I'm not really, so that's a really good question. At this day, you might want to feel like you want to sell, right? Because you just have a winner, and it broke out. You're up a lot, and now your mindset's going from, how do I make this a big winner? What if it just reverses, comes back into this area, and I had a big position, and now I'm flat on that particular position. So this is another concept. So at this point, I'm just letting it, volume is big. I'll watch the close.
Mm-hmm.
I'm not concerned about, this stock might reverse. If it does reverse and it hits my entry, I'm out. That's the worst case scenario, right? You make zero money on it. The best case scenario is it sticks, right? High closing range, big volume. And now you can, on an end of day basis, if it's showing this sort of bar, then you could go back on it. When the market's closed, your head's clear, things slow down for you, that emotion, all of that stuff sort of, as the 4 o'clock bell rings, it all goes away, and you could look at things rationally rather than looking at it from like real time. So at this point, when it closes this big, I'm keeping whatever I bought here. There's no rush for me to call it a day, and just say I'm awesome at trading. But it's at this point, the mindset is, how do I turn this into a big winner?
Mm-hmm.
It's worked. It's basically a free trade from a risk point of view. It's basically, I can move my stops up to even, and I have to see what happens. Now I'm thinking, 30%, that mindset just goes, how far can this go? Right. It's not it's maximizing gain at this point. It's not, I want to cash out and then I'll find another NIO.
Mm-hmm.
But it's sort of, market give you a gift, and you want to squeeze the lemon as best as you can at this point. So I sort of let it work. It will come back, test your emotions, but there's constructive volume still. I don't see a reason to be selling stock yet, right?
Mm-hmm.
Price action pulls in, constructive volume. You see the red bars on a relative basis are lower than the blue bars. There's no reason to sell it. It just keeps going, right? And you get another institutions show up on the charts again.
Mm-hmm.
Big blue bars. Price makes progress. Now, when will I scale? I guess when the market is under pressure, right? That's sort of when I'm feeling portfolio pressure, when I'm feeling that this is something that have not scaled out of, and I'm now starting to feel portfolio pressure. That is when I'll take a third of the name and say, I think I've had a really good trade on this. I'm sort of starting to feel that pressure in my portfolio. I'm going to take a third of it. And now that might be, whichever day. So you see how the market sort of slide down here, but it's sort of still constructive. So I would say pretty much anytime I feel portfolio pressure from this point on, I will take a third. I'm just looking for a reason at that point. If my at that point, the trade's basically done and you're trying to stay in this winner. But when you feel that pressure in your portfolio, you scale a third. And that's how I do it. Now, that is it textbook or someone is going to teach you that? I don't think so. That's just what I've done throughout the years, or one of the methods that I want to be in this name until I feel no pressure. Once I feel pressure on a net basis with all my positions being there, I will take a third of this name and feel good about it. And that's how I go about it.
Gotcha. And are you looking to add it all to this position, maybe off the 50 SMA, or really you're just kind of holding that core and are looking for other names?
Right. So in this particular case, there was some some of the data that I look at in addition to price action and volume that addiction for me is sort of the options market is telling me that the options market's active or the block trade market is active on the name. That sort of plays into my conviction. So when I bought this particular position, it would be 1.5 times my normal size. So now when the position starts working for me, I will scale down. I'll pyramid out. And that's just, you could call it, a swing trading thing or whatever. It's definitely not position trading, but I will scale out of the name once I buy what I want to buy at wherever my entry is for this particular name. So I'm pyramiding out instead of pyramiding in. That's just, at 1.5 times, I'll probably have like a full position here when I feel portfolio pressure, right? I'll have a full position here and then I'll start scaling out. So now it's starting to base above that 40. So this particular day, if I felt pressure on my portfolio, I would sell another third, right? Even though now I have a 2/3 position in this name. And that is still working for me. So right now for NIO, I'm sort of, I have that 40 as line in the sand on a weekly basis. So I'll go, Saturday morning when I review my positions, I will, where is it relative to 40? Okay, it's doing fine. I'll check back in and see, whenever it breaks that 40. Now it's built. That's sort of how I approach it. Like I'm pyramiding out instead of buying again and again on the way up.
Gotcha. All right. I think that's awesome. Just a quick summary. What are kind of the main price and volume characteristics that you think NIO is a good example of? I think what comes to mind first and foremost to me is how much it respected the key moving averages, especially the 21-day moving average throughout this entire run.
Yeah. So respecting its KMAs, tight areas with constructive volume, dry ups it's showing you dry ups when it's pulling back. That's key. A slew of RS days, right? It's outperforming the markets. It doesn't really give you a reason to sell anything. It's sort of that dream trade where it's not even breaking the 21 DMA until, it gets a little bit iffy over here, which is by the time you're buying, even if you bought at the 20 spot, the first time it really gets iffy is, this day, right? When it's coming back to 46. At that point, you have a double and your mindset's completely different. Now, over here, you might assess that, volume's getting a little bit crazy, that there's a big bar that shows up on this reversal day, and your mind will start playing at this point, like 2 closes below the 21 DMA on 100% winner. And that's what I'll go for. This particular chart just went, 150%. So I'll switch to the weekly. Look at the 10-week line. I think Matt's interview last week, really that whole, putting the 10-week line on the daily chart. I don't know why I never thought of that, but that's, if do that. I think it's a really good, if anything, just like I put it on my Thinkorswim charts right away. That sort of gives you a good perspective. So 10-week line is institutional support for names, not particularly NIO type names. I think NIO is sales driven, whatever the case might be. It's not a CanSlim type name, but Still that 10-week line is institutional support in the markets. And if you put that, you'll see that it's just stepping up, right? The whole way. And it sort of doesn't give you a reason to sell. Now, if we want to talk about current action, it's sort of what I'm watching for is that 50-55 box. If it could form some sort of tight consolidation here and volume starts drying up, right? Volume sort of builds the first leg of that U where you have big volume. And now if price consolidates sideways above that 50 mark for me, and volume starts building the shape of that U, right? And then it comes right back above and blasts past 55. That might be an area where the 2/3 of the 1.5 times position that I started, I might add a third of it again, and let's see how it works. And then sort of take it from there.
Awesome. Ray, thanks so much for walking us through your trades and the overall chart of NIO. For everybody watching, thanks so much. If you have any feedback or comments, let us know down below. If you enjoyed the video, go ahead and like it as well. And tune in next week for the next video. I don't know if we've decided on a stock yet, maybe Tesla or Celsius, one of those big names from this list that IBD's put out of the best companies of 2020.
And
yeah, go ahead.
And one thing I do want to add, make sure you print this out, bookmark it, do something with it, have it on your desk or whatever the case might be, but start marking up charts. Make sure you're training your eye. Make sure you don't watch this video, like you watch this video and you sort of wait for the next one. That if you want to learn and be a good trader, you have to do this yourself. You have to get your hands dirty and sort of look for volume dry ups, tight areas, train your eyes so that when the next chart, whatever it might be, right, you just replace this with another ticker, is exhibiting these sort of characteristics, you can refer to a past situation that you've been in, and sort of that adds to your conviction to position in the name. So make sure you just have this, start marking up charts yourself.
Absolutely. All right, guys, thanks so much for watching, and I'll see you guys in future videos.